So I got a comment here on this British pound video that I posted. And I just never know who I'm talking to when I post one of these videos. And since everybody is coming from a different place, that's why I don't complete my sentences, because in the middle of the sentence I think to myself, who am I talking to? Like, are they going to say, I don't even have a trading account? Or are they going to say that they're deep into some system that they already believe in wholeheartedly? So really I'm talking about belief systems and energy and effort. And the reason I'm trading scripts is because I can, if I drag and drop one order, or if I right mouse click and say, place a buy limit using MT4 platform, then it's about economy of energy. It takes longer to place a manual order, because if I just put a buy limit and a sell limit in, I got to come back and put in a stop and a take profit, or just a stop. This is presupposing that there's you're not trading with a zillion dollars in the account. You just placed a standard lot. It could really get away from you if you haven't predefined your risk, and if you even trade predefined risks. A lot of people don't just trade. So there's so much, it's so complicated right off the bat just from you placing an order. All I'm trying to do is make it so you can spread the risk. And I have another question from somebody. I guess I'll try to keep this compartmentalized. But what I see in trading is people using their brain too much for the wrong things. They're not focused on risk, they're focused on entry. And maybe on the outside they're focused on where they know they have to get out, where the other guys are going to come in, the people that are trading in the direction. So the guy's saying I have more hindsight than ICT. Now, I see more entry reasons than ICT, which ICT never talked about entry order tickets, and you never saw him trade. And he's gone now. I don't know what that's about. And it's a way to confuse newbies. So that's going to be always, if you're not confused, you're not alive. So if you use beginner's mind theory, every day you're a newbie. There is no old bee. Old bees are inflexible. And so you can get very tangential, which I'm really good at tangential thinking, as I see everything all at once. And I say, well, that's connected to that. And by the way, I just watched a video some professor did, and I thought, wow, he's tangential. He completes the sentence, but he throws about 40 concepts up, and he throws them up in the air there as kind of something. They're metaphors, but he throws about 10 out. So you have to, kind of take the full 3-hour lecture into account. The simplest thing is to say buy low, sell high. We all know that, but it's how would you do that? Would you wait to pull the trigger? I remember fear of pulling the trigger. This is considered to be how you trade. You see an opportunity and you pull the trigger, right? You see somebody about to break in your house and you blow their head off before they get to the front door. But trading doesn't have to be like that. You can set electric fences up. You can put pending orders, which would be a electrocution doorknob. And you can also shoot them in the head at the same time, just in case there's a power failure and the electric doorknob doesn't zap them to death. And you could also have the police as a stop measure. That'd be your stop, right? Call 911 and die. It's too late then, right? They come back there and they can come bring the police and do a report. And then the attorneys get hold of the report, and then they sue you for killing some fucknut that tried to break into your house. So, and the stop entry has a stop too, and everything gets very complicated right away. And of course, if you're not babysitting the chart all day long and you just never go to sleep, trading's got to fit into your lifestyle, right? And there is no perfect price to get in at either. Okay, so this guy, I went to his. Whenever anybody comments, I go to their page and see, well, what the fuck are they doing? And a lot of what I post is just for me. It's about me, anyways. This is just video journals I'm doing. And if I can rattle anybody's cage to ask them epistemologically, how do they know what they know about trading? Like, where'd you learn this stuff? And if you're making gobs of money, then great. But a lot of people aren't, because the markets are chaotic. They don't fit into your cipher. They don't fit into your moving averages. There's a thing called spikes. And when I started trading, some of these spikes would stop me out of, I think, a perfectly good trade, a perfectly rational buying or selling opportunity. And if you've never been stopped out of a trade, then maybe your stops are so wide that you don't have that problem. Or if you've never blown up an account, that's the old joke about the 60s. If you remember it, you weren't there. So, let's see here. If I can help this guy out. Of course, I'm a very defensive person, so if anybody compares me to ICT, I just kind of flip out on them. So my answer is, you sound like a newbie. ICT is gone. I don't know what that's about. And how long you been trading? ICT is just completely... He's got these videos where he has this... he's got that Illuminati music playing in the background. I mean... But I guess he's selling something. And I talked to people that he's... bent over and drilled. So apparently he charged people and just, it's just ridiculous. I don't know. But we all do it for the ego. Our ego's involved in trading. The scripts are trying to make this into a business where you can distribute your risk. I mean, I've used the analogy a million times, but who owns a business and just has one item for sale? It's not going to work. Professional traders scale in and out of positions, so it's work. That's going to be work for you. So if you're not into working, then you probably shouldn't be trading. I originally thought what any newbie would think is that I'll either build the Holy Grail or I'll find the Holy Grail and I'll trade it, and therefore I'll just be like, well, look at me, I'm just on the beach, I have my toes up, and I'm just making money because I'm so fucking smart. There's a lot of businesses, 90% of businesses fail. Trading's a business. So people say, why do 90% of traders fail? Because it's a business. And you got to be on your toes. There's competition. And in this business, the competition is price, volatility, and, pricing. If you go and look up vertical pricing and do a print and go to Google Images and say vertical pricing, you'll see charts that say, okay, 25% off, 50% off. There's no difference in the discount that a currency can go into looking for willing buyers or willing sellers on the psychotic parabolic moves. So he said, tell me one trader who could get useful out of you. Hindsight. Okay, well, you're stuck with hindsight. Okay, let's get this out of the way. Unless you want to trade live with me, call me on Skype, we'll trade live. But it's not about anything magic, it's about what you can emotionally handle. So you can kind of profile people and read into their psyche by the way they write and what they say. You can see, oh, okay, this is the way they're viewing it. So he's saying, tell me one trader, like that one trader. I could tell you 10 traders. There's probably a bunch of people that have figured out how to trade eventually, who get useful trading plan out of you. My trading plan is buy at the market with a 20 pip stop. You don't need to back test that. You just do it. You have to accept the risk up front. A lot of people think they can get around the risk because they'll find a better trading plan. Therefore, I have to worry about risk. So hindsight, buy here, buy there. Just give me a simple plan, for fuck's sake. Now, this is somebody that doesn't want to work obviously, right? You're like, show me would you show me the Holy Grail already? Tell them, this is like the old business school you go to. Well, first thing you need to do is assess the market structure of what you're selling in that. And now you're going to do a test market. Now, this is where you maybe run a demo account. You have to test the market to see if that stuff even sells. Somebody up the street here years ago was trying to sell high-end rugs in Redneck Town. It was cracking me up. They must have spent 20 grand prepping this retail showroom with halogen lights before LEDs and making it look, the lights they use in a jewelry store are designed to make the ring sparkle. And I mean, they didn't sell anything. And then they had to tear the whole thing down, but they prepped this thing. Oh my God, it looked like a museum. Who's going to drop $300 on a rug that they're eating like redneck porridge they might spill on this rug? So it's just hilarious. There's a huge and these are huge companies. They might have been backed by some big name. And you think all these big companies got their shit together? Hell no. They're big. They're making money. My first wife used to work at a store cutting hair, and I said, how do they pay the rent? They go, well, the other stores are paying the rent for this store that sucks because there's nobody in it. And you talk about mall rent. This is 20 years ago. Mall rent's $2,000 a month. You got to come up with $2,000 a month plus your lighting bill. Okay, so this is like getting stopped out of a bunch of trades. The overhead is getting stopped out. So I'm not offering some type of like panacea, utopia. If anything, I'm saying chaos is your friend. You're going to place orders in a huge spectrum. Now, the problem with this haircutting salon is that they were trying to compete price-wise, and they're in a place where the rent's so fucking high, but that's where the traffic is, so they're torn just like any trader. They're torn with, this is a good currency, a lot of volatility, but to trade, there's a lot of opportunity here, but there's also risk. The more movement that you see in a currency means the wider stop you got to run, and the less you can donate to that trade because you're going to really, you might blow up the account. You might blow up your business, right? You might have to take out loans to pay the people that work there. So it's like a real business. So, what newbie can follow and learn something? Too much confusion. Well, I'll simplify it for you. If you're going to buy at the market, then you're not getting the best price. It means you just want to get into the trade. If you're buying on a limit, it means that you have an idea that you're going to get a better price. And you buy a stop, you're going to get fucked. But how far? Because the further your stop is from current price, the worse that price is. You need other people to come into the market to get follow through on that entry. So try to stay away from stops. You're better off to just buy at the market if you anticipate. If you can read the market's behavior, like it just tanked for like 3 minutes, buy at the market a little bit and put a limit below and see what happens. I mean, that's the only romantic part about trading is that you don't know what's going to happen. If you knew it was going to happen, you probably wouldn't trade. At least I probably wouldn't because it's just no fun. You need the chaos to make it interesting. The certainty, and I'm going to go to this guy's. So he liked it. So I can't tell who I'm talking to. I don't know where this guy's at. So I went to his page, and here's he liked this video. So I'm going to watch this one raw. I've never seen this video. I'm going to play it back. This is some guy. I don't know if he's selling a course or not. A lot of people are just like me. They're just bitching.
Live trading, 17th of May, 2017. I've got an hourly chart of the British pound, US dollar in front of me here. It's 9:09 in the morning, and we do have the average earning index, which is due out later on.
I sped him up for economical purposes. In fact, I wish I could speed up the market when it's live. When the market's congesting, I wish I have a button to force reality to speed up.
Today, literally in about 21 minutes time. So I'm keeping my eyes on this, and for those of you who watched yesterday's video, you remember I was talking about the potential bounce from down 128.64 to obviously come up and re-challenge that resistance at 129.35, and obviously you can see we hit a high 41 during...
See, now, this is what I would say at this point of the video, from my standpoint, how I would trade this, and I hope this isn't too confusing, is that you need multiple approaches. It is confusing. Trading's about execution. It's not about analyzing the market. And you can see plainly here, and of course, you're stuck with hindsight on this chart. But I can see my trade. I could see how I trade it. Now, it's not for everyone, because some guy said in a video last month, how are you buying new lows? And as soon as he asked that question, it occurred to me he's waiting for confirmation. How could you just step in front of the market and trade it? And the other guy asked me, why so many fucking orders? Why not just pick one ticket? Well, how would you? It's impossible. It's impossible to know that the market's going to come to this level. If I look back, I could probably see it's clipping the treetops of something way back there. But this low, when I see this low, if I'm not buying in the pullback here, when the ATR of each bar, I'm not talking about ATR 14 and all that fucking shit that people have adopted because it happens to be what's on the platform, right? We came out of the box. Like, if you get something out of the box, did you ever get Play-Doh? Anybody still Play-Doh? When you take Play-Doh out, I think it's in a form that's the way the manufacturer shipped it, but you're going to manipulate it, right? So this idea that they're manipulating the market, it's really victimhood speak in the end. You need to manipulate your orders to fit the market. You have to accommodate what the market's giving you as far as liquidity entries. Now, the ICT guy would talk about some fucking trade block shit, but I'm just going to make this very simple. This is called simple ton. It's a ton of simple. So here, I'm going to use my blue marker. Go for the big kahuna brush. This is a low that you know exists. You want to start placing buy limits, and I say more than one, because what if you put a buy limit here and you put a stop here and it's like, wah, 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 and you miss out on all that money? What if you put a sell limit here at new highs? This is resistance. It's already been established. Now, what I'm giving you is how a marketer would, how in the retail world, how you would do something. You throw something in the showroom out on the floor, you see if anybody bites. But you also know the customers are not biting. So as the market's coming up, you need more than one tactical way to get into these trades. If you see the wick up here, if nobody buys, if no sellers, if you don't get filled on that sell limit that you placed here, you need to get filled on the sell stop. You want to be a seller. You don't have to be. Here's low ATR. You see the baby candles spinning top? It's telling you that the market is not. I don't know what this is. Probably the problem I think I'm having is I'm being too simplistic, and people are like, I don't get it. And like, well, you're overthinking what I'm saying. Trading doesn't have to be difficult, but people think it is because only people with bow ties trade this shit that are successful. There's a vision that people have of successful. I tell you, the guy I learned RSI from, guy's fucking killing it. Guess what? No Porsche, no Lamborghini. Hot girlfriend though, young. I was like, wow. And then I'm talking to him going, are you sure this is a trader? He doesn't even, oh my God, he smokes cigarettes. Oh my God, forbid. So, here, like low ATR, the fact that that's a doji. Now, you know this is support, so you need to get in on limits and stops. You need a composite entry to the market. There is no fucking one way to get in these markets. You bought at the market and the close that doji, put a limit and stop. You have 3 tickets coming in. One of them is a scalp maybe. But I'm going to go beyond that because I think I overdo it because like Ayn Rand, right after she left Russia, she was like, oh, fuck that stuff. She spent her whole life denouncing stupidity. So I guess I may be overdoing it, but not if you think about it, because if you make the ticket sizing, and this is complicated because you're going to have to say, well, I got 20 orders I'm running today. How do you manage all those orders? How do you manage all the staff? You go to these restaurants, you're like 20 waitresses. How do you manage all these? Well, some of them don't show up to work. It's like the real world. Some orders don't get filled. There's no difference between trading and a business. When I saw trading as a business book, I got it downstairs, $150. I said, well, this is retarded. Show me the trade. If this guy knows what he's talking about, where do I get in? Well, I am telling you where to get in here. Another thing to pay attention to is volatility. When you see a move like this to here, and this is I don't know, it's a 1 hour chart. So we have 2 hours of psychosis. This is full auction here. It goes up. No buyers come in. This could be a flash move. Sell limit banks up here. You're going to get stopped out of some of this stuff. At this point, you're saying, wow, the volatility just kicked up. You're filling this hole here. I hope this isn't too complicated. You're filling this hole. The same thing's going to happen on the other side. At the end of all that time, you're sitting back in fair value. Let's just consider fair value to be middle of the road pricing, which everybody accepts to be normal. Now, stuff is overpriced, and this stuff goes on sale. There's a sales don't last very long. Like this time only stuff. Disney played this game with Bambi and all these old films. You have to buy this now. We're going to open our Disney Sony vault, and you're only allowed to get Bambi now. You have to create this. It's not going to be there forever. In fact, if it sat down here for a long time, it would be an accumulation phase. But the phase of the market kind of, on the 5-minute chart, there's accumulation here. You can see that. Congestion. You'd see this behavior. Okay, so, but these are all good questions. What's a simple trade plan? There isn't one. There's a simple concept, and that would be sell up here, buy down here. But where? Where on the Fibonacci's? This guy already said, I told you buy down here. Now, he's got arbitrary, but he's just got one line. These are typically one position traders, which I don't get in a world that MT4 exists. I can do one drag and drop and lay a grid of tickets in here with a stop here, with stops here, or a master stop. I could hit button. And I can have these orders all placed in advance to pick this up. This is almost too obvious of a trade. It's almost too easy, I think, because you know the trade. Now, so there's a failure here, and if you're short here, now the other problem is going to be is, did I sell enough? And where's your exit for this? It's along the way if you're scaling out, but it's definitely right here because this is where the last top was, and we bounce off of that. Now you'd say, well, hell, I got out here and I could have held to here, but that's okay because you got buy limits down here, right? You can trade bidirectionally, buy, sell, buy, sell. Accepting the fact of impreciseness is what I think this guy's having a problem with. He's thinking that the more he learns, the more precise his entry would be. That's not going to work because the trend's going to go away. The more precise you are, people do, like I said, Coca-Cola did this with taste testing. They fucked it up because they had people taste Coca-Cola, the new Coke. They took one sip. They didn't live with it. They didn't drink the whole thing. When they took it home, they said, this is too fucking sweet. I'm going back to Pepsi. You don't think they have money? You don't think they spent like $2 million on this? Is a story by the guy that wrote the book 10,000 Hours. He describes this flaw. I can't remember his last name. 10,000 Hour. The book. You need to do something 10,000 hours to get it together. I guess you do. You need to live. You need to wake up 10,000 times to figure out that it's okay. The sun's going to come up the rest of your day, or actually it might be cloudy, but the rest of the day is up to you. So one guy said to me, what you're talking is not talking about trading, you're talking about philosophy. But if you don't have a philosophy of life, but if you're going to sign up for a course and they're going to say, we'll show you how to trade, it may not work. It may not fit your personality. And you might go rogue like me and just design your own psychotic. But I'm using the implementation of the fact that I come from the old days. And we used to pick up phones and say, I want to buy Christmas corn, because we couldn't say December corn because they might fill November corn and you might get fucked. Now you can hit a button and launch a bunch of orders. So maybe I'm overdoing it, but I don't think so. Because some of these orders may never fill. And if it's only one click, as opposed to picking up the phone. And I think I had a push button phone back then, but can you imagine dialing? Like you see a trade opportunity waiting and the broker's number is in 8s and 9s. I don't know if anybody's seen a rotary dial phone. I was talking to somebody, this kid that works at the dollar store, and I was trying to crack jokes of old things, and he was just looking at me like, man, you just gotta go home. Just go home and be angry at home. But so it's the older you get, the harder it is to convey stuff because you don't know, the references, and it's tough sledding for that. So let me continue with this guy's assessment of the market, and I just like to cold watch this stuff and learn from what would I do, and is there an opportunity here, and does it retest this high, and could I put a sell limit here, and also get in if I'm babysitting on a sell stop here, or just pull the trigger because there's low volatility. It's safer to get in at the market here when the market's quiet than it is to get in. See, the market's really crazy now. I wouldn't buy here, and I'm more likely to sell up here. Will that trade work out? You also have to be willing to do a series of trades. You're not going to, for the one trick pony people, for people that want just one killer system, you'd have to trade multiple currency pairs. It's just hard to manage all that because be realistic. Are you going to pull the trigger on every doji you see? Maybe all dojis are happening at the same time on multiple currencies or multiple instruments, Bitcoin, whatever. But I think this is easier trade is to see that there's a liquidity hole here and you can just place a buy limit here or walk away and never babysit this trade. The idea is that you don't want to babysit these markets. That's the idea of the EA is you have a thing you let go. Hey, you will worry about that. Anybody that's ever left their business, I have a buddy that killed himself because he left his business in charge with other people. His business was failing, so he went on the road and he got a day job. He comes back, and the people he left in charge, they probably trained for 5 years, fucked it up. He was about to file bankruptcy, and for him, he didn't want to downsize into an apartment and tell his spoiled wife and his kids, hey, we got to go to an apartment now because Daddy fucked up, so he killed himself. Go figure, right? But that's the thing, the ego, the shame, and that happens in trading, right? There's an old book I got where the opening page says, this is a tribute to the guy that killed himself in 1908. This is the anybody remember the crash of 73? Was it? People are jumping out of windows. Well, people don't realize if you go back in the Dow Jones chart and look, I think it was 1980s. People are killing themselves because they lost money. And you can't even see that fucking pullback on the Dow Jones chart right now. But look it up. 1978, I want to say. Something. This is when gold spiked to 800, so you can just find gold on the chart, find that time. But in hindsight, so to speak, you cannot find that pullback on the chart. The 2008 crash and all those other sell-offs crash, whatever the fuck you call it, they show up, right? So let me play this guy's tape here. So this is the thing he liked, and this is more. I'm really an iconoclast. I'm very contrarian, and I'm angry, and I'm also always taking the other side of the equation. I'm always looking for the other side of the story. Like, so if you say yes, I say no. But I'm not doing it to be disagreeable. It may seem like that at first, but it's just about trying to hunt down the truth. So here is his, and he didn't say, this is what kind of irks me. ICT did this shit. He didn't say, well, see, we had buy limits pending here and we didn't get filled on all of them, but wasn't that a great trade? At least lie to me. Tell me you got in there.
In the overnight session, we backed off. We found the bids again. So I'm just going to keep my eye on price action here. And if we do start to come back up towards this...
See, this keep your eye on price action has always been difficult. Here's sort of
area, then I'm going to try to get in prior to that release to see if we can actually get a spike through the prior day's highs and obviously take out stops of everybody who then shorted. The market has invariably come back.
So he wants to go long, just buy now. Like, this is the way I look at it. If you're going to buy, just fucking buy one for the market. Buy one for the Gipper, right? Ronald Reagan. One for the Gipper, whatever the fuck that means. I guess you got to watch bedtime for Bonzo for that, but...
And the consensus is for a higher than expected print. So I'm just going to watch this closely. And if we start to get up to around...
Always watch it closely. Well, I typically just watch it out of the corner of my eye. I see the tick chart flinch and I pull the trigger. In fact, I'm kind of trigger happy in my earlier trading. I was trigger happy. I didn't even know you could place a limit order. And if I did, I'd say, fuck that. I know where the market's going. But now that I'm old and tired, I just say, let me just put out a trade that makes money.
Around about 40, 41, then I'll be buying this and hopefully see if we can get a bit of a run before the release. But if it so happens we're trading into the release and obviously holding through it, then that's absolutely fine. But
Hope's not a strategy. This is what I've been told. Of course, this is what options are. Anybody option traded, anybody bought and sold options, not writing it, but bought and sold, they say they're selling you hope, right? I hope it gets there before my option expires.
This is going to be an intraday move, guys, only, solely based around the British pound flows. Anyway, guys, I'll press the pause button now.
Oh boy.
Okay, guys, 9:12, and as you can see, we've come up to test that 40 level. I actually got filled at 129.40, so I'm in the position.
See, this is what I don't get. The guy buys 1.5 standard lots here. He got filled on confirmation. But why on God's green fucking earth? And this is what the contention I have with the one-trick pony traders, is why not realize how stupid that is? This is based on fear. It's also based on, I want to make sure that she doesn't have AIDS before we get married. You don't have to worry about that in the market because you're going to be fucking so many currencies. You got AIDS, okay? You've got crabs. You got the whole 9 yards. Except that trading's a dirty, messy game. And just deal with it. He has the infamous RSI 10 period below. That's very German. I saw German platforms have 10 period. And I'm not going to bore you. There's really no good signals in this RSI because it's set. The index is set so unsensitive that you can't hardly get anything out of it. In fact, you just strip that off the chart so you get more vertical dimension, and you can see all the high-res prices you can get into. So here's your classic retail. We put a buy. He's getting the worst price, and he's risking, if you go with structure stop risk, anybody that knows the old saw where you either put a stop down here or here, you're risking that. Why the fuck didn't he buy on limits here? And why didn't he buy at the market just before I said that? And I swear I don't know what's coming on this tape. So I'm just saying, why not just distribute your risk? Why are you putting so much on one thing? Well, because people want to marry one girl, right? It's illegal in most places to marry unless you're, got a towel in your head or you're in, some of these states here where you get polygamy, right? So I'm a polygamist trader, I suppose. So let's go to his view of, he might make money on this trade. I'm just saying that you get man, can you imagine putting and look at the size. Really, you couldn't buy a 50 at the market and put the 100 on for the confirmation. What I'm saying is that you bought a 50 here, put the 100 up there, and get in a spectrum. Distribute your risk. Don't have just one aisle in your store.
Position now. I'm long, quantity of 1.5 lots. So every point it moves forward against me, I make or I lose $15. I've got my stop position below that key support low that I identified yesterday, and this is the running profit and loss. So we've obviously got to clear through this 41 level. We've then got the 129.56 level, and I'll be watching that very, very closely because, as you can see, if I just get rid of it, in fact,
yeah, we'll watch that very, very closely. That's my Porky Pig trade. We watch that very, very closely.
It coincides today with the resistance, the initial resistance level. Now that comes in bang on 129.56. So that's going to be a very key price point to keep my eyes out on if we could even get up to that level. But as you can
see, he's underwater now. So he got trapped. It pulled back. He's long, right? No stop. Oh, it stops down here. Now, I don't know. This is the 1 hour chart. Your stop's down here. This is 1 hour chart. Okay, I guess so. Well, you're not going to get stopped out. If you do, it's going to be ouch.
See here, this is an hourly chart. We go to the 5 minute. Lots of action.
See, look at that. Lots of action on the. But he's getting trapped. I mean, who trades like this? Let's hope he's not charging. It says Forex eLearn, live Forex trading. And people are saying I'm a bad teacher. Holy fuck! I never tell people to buy this high. I say rarely buy it. In fact, right here, he could be buying right now. He could be scaling in right now. He could buy here. He could put buy limits here. Here's an obvious place to put a buy limit. At this pivot, where this top bottom failure, put a buy limit here. Buy 20K here, buy 20K here, buy 20K here. You see what I'm saying? Why are you fucking loading up on this dumbass trade? He might be right in the run, but why does he want to see a drawdown? Okay, why take that heat? Fuck, man. Nobody drives one race car. I was watching Adrian Blue play guitar, and he broke a string. He plays a really skinny strings on a fly guitar. He reaches back. They're doing a classic King Crimson song, Indiscipline, and he goes back and gets a guitar, and the band just keeps a vamp going. It's beautiful. It's just beautiful because he's got another guitar preloaded with strings. Who has one guitar on stage, even? I don't know if I can make it any clearer.
Sort of interest up at this sort of zone, but we're going with the long side on the basis that the stops are positioned above. So I'll press pause.
So he's going to go hunt down people's stops, and he's going to get in on stops. Wow, man. I mean, it's back. He's trading backwards for me.
And let's see where we go with it. Okay, guys, 9:33. So 3 minutes into the data release, and a little bit of action here. As you can see, we did spike up to fresh session highs. We backed off a little bit, and now we're
backed off a little bit. You're underwater on $150,000. Man, let's not have you open my store, my next widget store, my tchotchke store. What the nice thing about tchotchke stores, there's so many things. There's just tiny little things that just cost a little bit. You get to register. Next thing you know, the person bought a bunch of shit. That's how I'm trading. Okay. Next thing you know, guy bought a bunch of little fucking statues. Do you have that big Geronimo statue that won't sell? Yeah, right. Of course. And in fact, you can't return it. The spread's so brutal. The spread would be the shipping, and you're fucked now. You own that. Now you put that in the front of the store. It's the stuff. We just adopted that. The store is going to buy that. We'll write it off on our taxes.
Just kind of fiddling around. So the data was
piddling around. Look at the fucking heat he took. Now, what did I just say? I swear to God, I've never seen this fucking video in my fucking life. Was not this the place to get the fuck in on a limit? What did I just say? Okay, hello. I have never seen this video. You have to trust me. And I sped it up, so I'm at 1.5 speed because I have time for me to bitch. I leave time for me to complain. Okay, so let's forge ahead here and watch bad trading in action. But it is live. He's gonna Forex e-learn you. I've been e-learned. I've been real smart. How did you get so smart? I was e-learned. That's what it says on my license plate.
Was virtually in line with expectations. In fact,
virtually in line with he's a fundamentalist. The guy watches the news. Virtually in line with expectations. Look at all this sells he could have placed up here. Now here's the classic sell that you would know. This is the bid, so you know you got filled here. Sell limit with a stop here. Look where his stop is. And I don't know. People read a book. The thing is, the internet is just marketing city. Okay, I'm not selling shit. I don't need to. I wouldn't. It would be total conflict of interest philosophically because every time I do a video, I think, yeah, that's the way to trade. So I'm trying to always get better at cutting my lawn. Right? You got to sharpen the blades. You always want to get better at trading. You got to. It's not something one and done. I got an EA, let it go. It's fucking pulling. No, even EAs need to be tweaked to the ATRs. These EAs, I almost bought an EA once. I think it was called, what's that one that was on TV? Oh, people just like, look at the equity curve on this puppy. I can't remember. It's a dumb name. Remember the first robots, right? I can't remember the name now. This is like some mega. If it's mega, you want it, right?
What I'll do is I'll see if I can get the feed up so we can quickly have a look.
Wow.
Okay, so here we have average weekly earnings excluding bonuses, month-on-month 2.1% versus 2.2% expected.
Now this is where you never want to go. How does this fucking help you trade? Fundamentals? Yeah, that's why he's trading with wide stops.
Prior 2.2, so a slight dip there excluding bonuses. But the average weekly earnings did come in as expected, 2.4% versus 2.4%.
Oh, well then stay in the trade by all means.
0.3. The unemployment rate did dip slightly lower from 4.7% to 4.6%, so that's good. However,
I could understand if you charted the fundamentals. You could chart it. If you look at the chart of unemployment and take those trades, right? It's extreme. You got a channel on the unemployment. Then I say, okay, you got a Gartley on the unemployment chart. Okay, take the trade.
Employment claims in terms of the claimant count change did come in at around about 17k, above expected. I believe the expectation was 5k. It's not been printed here, but that was something that was squawked out. In any case, still looking okay. I mean, there's been no major reaction at the moment. If we go to the 5 minute, you can see that we're kind of just trying to make our mind up as to whether or not we're going to have this run.
Wow. See, I think so. So I was able to kind of see where this guy's coming from. And if you think this guy's this is a good idea to trade like this. And this is simple, right? He has one ticket. He has one stop. It's simple, all right. But wow, I mean, it's just you're betting so much on one idea. You know? Even the iPhone has different flavors. You have a 7-inch screen. We got the big, right? I just want the Apple, the original Apple sticker. I got one here on a case, the original Apple sticker with a rainbow.
If we start to kind of roll over and break through to new session lows, then I'll probably look at just cutting the trade down here because it doesn't seem like it obviously wants to get the traction going. But as
we're going to cut the trade down here and take a loss. Man, I tell you what, if he would have put a sell limit out there, do you realize he would have made this much on a scalp of that much? He's trading backwards. He's trading backwards. If you're going to say profits are a forward idea,
it stands, I'm still happy to sit with things, providing we're obviously above current session lows and current London lows.
He's happy
as it stands. Okay, 942 guys. Prices are now trading at 129.44. So it's just grinding up to new session.
Grinding. I know. I'd be like, man, I got to change my trade plan. I should have bought on that pullback. You could have bought really fat on that pullback, that wick. Here's the 1 hour, but he went to the 5 minute. That's where that entry was.
45, which is good. 12 minutes after the release, we can obviously see the next target, guys, is pretty obvious. So that's yesterday's spike high around about 56, and the initial resistance level at 56 as well. So that's what it looks like the market is buying to test. So let's see if we can get a move through 56, or whether or not we're going to fail at 56. Here we go. Here comes the stops. 51, 50, so the bigger
I think he's speaking of...
I'm going to go ahead and move my stop now.
He's speaking of bearish people's money management stops, I think.
Now, guys, just below the current session lows. I'll stick it at 129, the handle.
Look at that. Manual trading.
Okay, so there we go.
And you saw it. Now, those 2 keystrokes. In the world of computers, he's on MT4. Why on God's green earth are you doing that? Well, he's not a computer guy, maybe. Right.
We're now, it's a 40-point risk. 471.51 is the sterling risk. Let's see how we break through. I wonder if we can get it live where we are. It's not far away. It's only at 50. It's only got to move 6 points, which is, you know, hardly anything when we're talking about the pound.
I've seen it turn on a dime and go the other way.
Well, guys, instead of just taking up your time, I'll press pause and let's see what happens. Okay, guys, coming up to 11:15, and as you can see, prices have now started to come up, and we're testing that initial resistance level, trading up 129.50.
Well, what happened was, you can see the big pullbacks. You can see that it's grinding. Bunch of scalps there on the 15-minute.
Very, very, very close proximity to the highs from yesterday, 55, and it'd be nice to see if we can get a nice 10-point spike through the highs, and I'll look to come out of this, guys, going into the afternoon session. The dollar's seen a little bit of recovery across some pairs today. The sterling is obviously one of the ones that is better bid at the present time. There is a hell of a lot more tougher resistance coming up in the way of, if we go to the daily charts, 128.70 and 128.80. So as you can see, even when we've had very strong price action into this level, we've seen several rejections off of the highs. Here we go, guys. So here's 129.56. I've got the 5 minute chart now in front. Let's see if we can get a
5 minute chart. So here's the entry I was speaking of here. You have a buy limit here, and you start selling. You get out, you take profits here. You re-enter the trade here. You see this dojis? If you connect the dojis, you have buy limits here, or you wait for a small bar on the 5 minute. You just pull the trigger on these dojis, and you've already banked all this money. Now you get in for this price pulse. You scalp that, and you scalp that, and you can see that. You can see this, right? You see them taking that out, and you ride that up. Who wraps up 1.5 standard lots? This guy must have a Lamborghini, and then has the patience, which I don't have. maybe where I'm failing. Ah, jeez. Look at this, perfect touching the moving average. This is where you get in. Alexander Elder entry looks like this. You wait for it to touch that. You put a buy stop here. That's where you should be putting buy stops, not up on the top of the daily. A major resistance stop entry? Talk about risky.
A leg up, so to speak, through the stops in the next few moments. Okay, guys, 11:20, and as you can see now, at the
I would have been out right here. I'd be totally out of this trade.
the bottom of the screen here, close this trade. Profit banked
See, he did what I did.
£182.92p. We did just literally in the last 5 minutes have the spike through. However, it was not sustained, and I was not a fan of what I saw here on the 5 minute coming up to the obviously the initial resistance past yesterday's highs. That's not really what you want to see when you're going into a strong resistance level. If we really want to clear through it at this present point in time, we've got to see it go quick. Okay, and that just didn't happen. So I've used the discipline instead of just sitting with it to basically cut the trade here. So entry price 129.40, exit 129.56. Also, I did notice that we were within our take profit range of another area of the market that we look at, and that's the weekly pivot levels. So as you can see, we have the weekly pivot initial resistance at 129.67, and part of our strategy.
Of course, we didn't touch it. See, here's what he's missing is that the pivot is the top of the wick. That's when the market turned, and what pivot means turn and go the other way. Sell limits here. Buy limits here. Take profits here in the first portion. Let the rest go. Sell limits here. Sell limits sitting here pending. Sell limit right there, low risk entry. Buy limits here. Buy limits here. They stop you out. You do the same trade here. You make this. So you will lose buying new lows. This is a 4-hour chart. So they stopped you out, and hopefully you got in on sell. Hopefully you played the breakout strategy. So you have dual strategies, right? You have breakout, because not everybody's the same customer. When people come in the store, some people are there just to buy something and get cash back, like me. And some people are there to actually buy some big ticket item. But even here, if you're a swing trader, you can see that your buy limits here, without regard to anything else in this divergence, you're just buying like hog long here. And of course, you know you're going to start selling as it comes up into here. But it's a compromising. You can't trade one ticket, one strategy, and all that. You can. I don't know how you do it, but I'd like to see that done. I mean, I'd love to see. And like I said, he made money in this trade, but it doesn't mean that he couldn't have done it more better.
Obviously, without giving too much away, we always want to.
He doesn't want to give too much away. I love these guys that somebody sent me a link. Somebody sent me a link to a video where the guy says this is proprietary stuff, as if he released it. It's not going to work because everybody's going to go, oh man, that's so good. Everybody's trading that. Therefore, the market stands still. Another myth. Everybody's trading it. There's no way. People are trading this because they actually need the fucking money. There's actually a country called Britain, and there's a country called the U.S., and they actually have this. There's actually a spread there between the two countries. They call it the pond, right across the pond. It's actually commerce. It's not a bunch of people looking at a 20 EMA. That's not what's driving the market.
Get out at least 5 points before the initial resistance target to factor for different prices and spreads, etc. As you can see, the high that we hit here was 129.60.
He's missing the high here. Now this is somebody relying on this floor pivot shit, which is complete bullshit. I just had somebody telling me how they laugh at that floor. There's a real trader. I can't remember this guy's name. He puts his face right in the camera. He goes, people tell you floor pivots. They're like, we don't use floor pivots. It's fucking retail mentality. Like, what I need to do is get a brand new car because I like that new car smell, and you drive it off the lot. You just buy a demo car. Oh, I know how that new car smell.
Almost 129.61. So it was almost a reason to look at liquidating coming into the.
Almost a reason. Give me a reason, man. Fucking A.
This resistance zone. And as you can see, it's been very stubborn. We've had a nice run up. Let's see what happens in the afternoon. There might be an opportunity where we can have a bit
Not as stubborn as me.
pullback and then the buyer step back in again, and maybe it's that time we're going to go again. But as it stands, at the present point in time, you can see that the market, at least within the very short term, is not ready to break through. So we've
the sellers are coming in like a whore up there.
Made the decision to come in and get out. So back to the 60-minute, there's the entry, there's the exit. The 5-minute chart obviously shows the price action a little bit more clearly as to what we were trying to look for. Okay, guys, if you're interested in actually learning this strategy, which also applies to end of day, as well as, of course, the intraday stuff, then visit the website, forex-learn.com, and join the team. Take care, guys. All the best.
Join the team. I'm not a team player. I'm an angry individualist. Look at the comments. So here's the guy that's asked him, "Hi, Liam, quick question. How high were you looking to go?" Well, I was going to do some ecstasy later tonight. Shouldn't you be looking for at least a 1-to-1 risk-to-reward ratio? Yeah, the guy risks an incredible amount to make that. That could have been a big loss compared to a little potential profit. Still appreciate your video, though. Then we have the answer from Forex Learn. I guess E means electric. I don't know what that means. I think it's taken from that E-Trade. Hi, Mark. Thanks for the comment and feedback. Much appreciated. That's not what I'm going to say. I'm going to say, fuck you, eat shit, and die. But the concept of risk to reward has been pointed out with our intraday strategy on a number of occasions. Our strategy, which includes analyzing recent lows, news flow, that's better than even market flow, sentiment. How do you judge that? I remember I used to get the sentiment report. I'm like, and price movements. Proprietaries, I can't pronounce that, I'm sorry, but you can see that word. On risk and probability before risk and reward, right? Yeah, he's right. Probability of making 20 pips with a 3,000 pip stop is a lot higher. What I mean is that our risk is on a position is always kept to a low of 2% at most. So let's see, put on one ticket. This is the classic fuck up. Put on one ticket, risk 2% of your account. Because what if the news was something outrageous and the market spiked down and took you out? I'm down 2%. I'm done trading for the week, for the month, whatever that is. You're out of the game. How can you survive these markets on these hairy one-ticket entries? Likelihood of being stopped out of the initial stop placement is rather low. Yeah, he's so far away. But if you got stopped out, you'd be like, "Holy fuck! I just lost 2%." I'm surprised. I'm assuming he's trading with more than $180 in the account because I saw he made a $180 win. He must have had some money to get into the trade. Of course, with all this leverage, you don't really need that money. If it backed up, though, he would have been under margin. They would have taken him out on just the pullback there alone. The likelihood of being so. Because we let price inform us when it's time to enter. Man, I just, those buzzwords, we're reaching out to you. Oh, we haven't been informed of that yet. I'm easily triggered by certain words at this point. When it's time to enter, and by that time, the bigger money is usually behind the move. You got to hope the big money's coming in. You got to hope the crowd. It's not necessarily the big money. It's just all the money filling that vacuum. The probability based on factors that we look at are imperative, and we prefer to trade with that bias. Bias trading, there you go. Another detriment. Rather than attempting to look for risk-reward favored setups, like the ones I just showed you, the most important point is that although our initial risk does not seem that appealing, yeah, I'm shitting my pants, the risk is always managed, and a high probability means that we're right a lot more than we're wrong. Hope I've explained this. It makes sense. Oh, you sure did. So I hope that helps. Another example of ridiculously single-minded, one giant ticket, dumbass trading. Thank you very much.